Good morning, everybody, and welcome to another show, The Golden Nugget, every single Wednesday at 11:30 Eastern Standard Time. We had a really good week last week. Spoiler alert, our trades went 3 for 3 last week, which was great. We'll talk about those here in just a second. But if you are here for the first time, we appreciate you. We wouldn't have a platform without you. So again, humble appreciation for you showing up. And for the people that show up every single week, we appreciate you as well. So without further ado, let's explain to the people that may be here for the first time what the Golden Nugget is and what we're going to do in this show. So first thing we're going to do, we are going to gauge gold. I am your golden guide to everything that's happening inside of the metals market. So we're going to go over the trades that we gave out last week, the ones that did well, the ones that didn't hit, why they didn't hit, and then we're going to give you trades for this week. Secondarily, we are then going to do the silver snapshot, which is where we do the exact same thing on silver, give out the trades that we took last week that went well, the ones that didn't hit, why they didn't hit, and then also give you trades for this week. Then we will get into a segment called the Commodity Compass, where we talk about everything that you need to know that's coming up inside of the metals markets and just the markets in general, because TA is TA, and a lot of these fundamentals that we're talking about in this show translate to every other single market. Then we will do a special segment, which I call the Golden Nugget. That's where we give you a little snippet of what I give out inside of the Golden Opportunity, which is a full 14-hour training on how to be profitable inside of trading. We teach you everything that you need to know, from fundamentals all the way down to, candlesticks, charting patterns, give you strategies, all that type of stuff, and kind of show you and get you inside of my head of how I'm taking trades and how I developed an over 80% documented win rate on the verified investing platform. Then what we will do is get into our two special reports, and we will talk about the economic calendar. So we had a star-studded week last week. Before we even talk about it, let's go ahead and do our first segment, which is called Gauging Gold. Now, let's talk about our trades first, and then we'll give you the next trades. And again, I only come here once a week and give you these actionable trades. So I try to do my best to give you every possible scenario. You're going to see on this that there's one scenario I didn't take into account last week that we would have had a trade on, unfortunately. Now, let's talk about the ones that didn't hit. Okay, so this one did not hit. If you saw, we gave this last week. We would have had to get a rejection here at the point of control. We did not get that rejection. We blasted through. This was FOMC, or this was Fed week here at the Jackson Hole Summit. So when we gave this trade out, it was Wednesday. It was the short of the point of control, okay? Or the point of control back test. Obviously, we didn't back test it because Jerome Powell said what he said, and then boom, just blasted through it. So we didn't get a trade there. That's why we did not get that trade. So, luckily Jerome Powell, he came out and said that we were going to be seeing potential rate. We'll talk about that here in just a second. We did not get this trade either because this is the ascending triangle, okay? And we did not break down. It's not an ascending triangle, sorry. This is the symmetrical triangle. The ascending triangle, we can show you on a different portion of this video. Now, we did not get this trade, obviously, because why? We didn't break down from the support right here. Now, what we did get was our long, and this was from the previous week where we got the back test of the point of control, and then we set our stop loss outside of this I guess it was a support, technically the support of the symmetrical triangle. Obviously, then Jerome Powell came in, blasted us up to absolute profits. It was a beautiful trade, beautiful setup, and that was a great trade. Okay, so if you got into that trade, congratulations on that win, because that was only a 2x risk to reward ratio. But I mean, let's look at, this is your worst case scenario getting in. I mean, let's look at your profitability here, 1.2%. Great trade, guys. Great trade, everybody. Then secondarily, this was our trade that we were talking about. Okay, if this one hits, which it did, right? This is the one that we were talking about where if you get above the 200 moving average, this is where you would add to that position. Now, if you got into this trade, again, you are wildly profitable. This was, I believe, a 6x risk to reward on this. You probably didn't get in immediately. You probably got in maybe halfway through that candle, or maybe you even got in here. But the profit target was still the same, still a 4.5x risk to reward ratio. Let's assume that you just got in on the back test, right? And let's see what the percentages would have been on that. Bang. Another full percent. Okay, great, great. We're looking good. And then obviously this is the one that's hitting now. It literally just hit this week. This is where we were talking about, okay, if we get these longs, we're going to want to add at this level once we break outside of the symmetrical triangle. So this is where you are, kind of in your trade right now. So that one has not played out yet. Obviously, game time decisions. Do you take your profits up here? Do you set your stop loss to break even here? Because the further you get down here, the more you're going to, kind of get into drawdown. So I would probably be putting my stop loss at break even here and have a risk-free trade. That way, you don't get stopped out, because you can always reposition if it comes down here, bang, and then come back up. And that's something we'll talk about here in just a second. Obviously, we got this long on this this falling wedge that was right here. Let me give me just 1 second. Bang. So this was your breakout from the falling wedge, your back test, and your regaining of those moving averages, right? Now, secondarily, we set our stop loss outside of here. So did you take profits here? Maybe you did. I don't know. You could still be in this position. I'm assuming people are probably still in this position because this was more of like a swing trade super long. So you're wildly profitable right now. Stop loss is below here. So, if we do get stopped out, our stop loss is right here now. Okay. So we did get, a lot of trades last week. Technically, we got, two that guaranteed, made us money, two that you're in right now, potentially, that we'll see what happens next week. Now, let's talk about what's going on inside of the gold markets as it sits right now, okay? So first and foremost, I want to talk about this, whoops, I took the wrong thing off, symmetrical triangle. The symmetrical triangle back test, this is your longing position. If you're not already in those longs, this is your long right here, especially if the 100 moving average comes up here and intersects it, right? You would long, okay, long the bounce of the symmetrical triangle and 100 moving average. And then you would set your stop loss outside of the 200, because the 200 will probably be somewhere up here. Set your stop loss outside of it, and then you would target probably these highs right over here, okay? So that's a pretty easy, let's go ahead and label that with today's date. That way we can keep everything, bang. Okay, so 827 long, that's great. So we can take that one off of here. Now, the same trades apply, okay? The same trades apply for the most part. The levels have pretty much stayed, relatively the same. Say you come down here and you lose this, and then you bearishly back test it. This is where you would enter a short and then aim for the bottom end of the symmetrical triangle, okay? So this is 8.27 short. That would be, and again, remember, you need to back test this level. So what do I mean by that? Say you come down here, right? And then you got to get under it, back test it, and then you would start falling. Now, again, game time decisions, what happens whenever you come closer to the 200 moving average? Do you get out of your position? And I'll give you an example of that in the silver snapshot, right? So that's our second trade. And those are kind of the two trades that I'm seeing right now. This $3,370 level is going to be like a very critical level that we really need to hold. So those would be the two trades that I would be looking at right now. And then potentially, if you were to get all the way up here, right, which I don't know, if we're going to be able to get up there all the way this coming up week, but, up here to these swing highs, you would look for a swing failure pattern, right? So a swing failure pattern at those swing highs. And then you would obviously set your stop loss pretty tight on that, but you would look for a swing failure pattern to come back down to these lows, right? So let's say 8.27 SFP highs. Okay, bang. And then there's a secondary one that you could also be looking at, and it's these highs right over here. So do you get a swing failure pattern at those highs and then ride it back down, to the bottom end of this channel, or even these swing highs? You could. So these are the ones where you would want to, those are game time decisions. You have to make that decision. And if you don't know what a swing failure pattern is, I don't have time to explain it right here. I would encourage you to get into the Golden Opportunity, or just Google what a swing failure pattern is, and you'll see exactly what I'm talking about. Now, secondarily, there's one other scenario, because say we do break this level, I would be looking to enter longs potentially down here, right? And then ride it back up to, close to these swing highs, potentially. So long, 8.27 SFP. 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 8.27 long the symmetrical triangle bounce. Okay, so that's 827. We need to label that just really quick. Give me 1 second. 827 long. Okay, so those are your 4 trades as it sits right now, or 5 trades as it sits right now. We've got 5, I guess. We've got three shorts and 2 longs. So, we'll see what ones play out next week, but let's get into the silver snapshot. All right. So as it sits, silver right now is kind of coming back and back testing one of our levels, which could be getting us into a trade right now. So let's talk about the trades that did hit and didn't hit first, and then we'll get into the real-time TA. So this trade did not hit. Why? Because we gave it out. This was where the value area low was. And then obviously we bounced from here and I said, hey, right around here. This was on Wednesday. I said, hey, if you come back down here, you would just play that long again. Obviously it didn't hit. Then we got our POC, right? We got our POC long and our 200 moving average bounce. Okay. So what do I mean by the moving average bounce? Right here. So if you got in on this, this is where you came down, and you basically came down and you banged off of this 200 moving average. You got your bounce, right? And then this was right before the Fed meeting. So, you basically got your profit in literally one candle. It took you from entry all the way to profit. Not that you got in on this candle, right? But you did bounce from the 100 moving average right here. So you probably got in on this candle right here like I did, okay? So then you just set your stop loss outside of the lows, probably right around here, and bang, you're wildly profitable. Obviously, we're not like fully profitable. I get that. But you set your take profits and stuff. You didn't know whether or not this thing was going to run 3% on, Fed Chair Jerome Powell. So you took it right up here to the top end of this trend line, bang, good profits, 1.47%. Great trade. Yeah, I mean, that was just a great trade for anybody that took it. Now, this is the trade that we're kind of getting right now, which is longing the break of the support and the back test and the 200 moving average bounce. Okay, so if this hits, right, this is a pretty decent trade. I would set my stop loss just outside of these swing lows and the 200 moving average, and then you're aiming to take this target all the way up here. Now, obviously, game time decisions. You got to see what happens at these swing highs right here, right? And you got to see what happens at these swing highs right here, okay? So we can actually say, okay, we'll just move this to 827 because this isn't one of the ones that actually got us profitable, right? This is the second one that got us profitable, right? So we got our rejection, the first rejection at the point of control, okay? And then we bounced from the 100 moving average. Now, you might say, hey, Drew, this didn't get all the way down here. How did you make money on this trade, right? Well, first off, whenever you get into profits, you move your stop loss to break even. That way you don't have a losing trade for no reason. But secondarily, what happened here, right? You got into your long at the 100 moving average bounce and the 200 moving average bounce, which is what we always talk about, game time decisions at these moving averages. Bang, that cancels out this trade. Now, okay, you only had, what, a 2x, 1.5x risk to reward on this, and maybe, a little bit of a move down. It wasn't anything substantially, like, crazy, I wouldn't think. But, yeah, you definitely got a good trade. You got in, you got out, and you knew when to get out because you got into your long, right? So that's one thing you got to take into account. A lot of times your longs and your shorts are going to tell you when to get out of your, prior trades. So that was great. So those are the 2 trades that we got, last week. Obviously, this didn't hit because we never broke down from the symmetrical triangle. And obviously, this one never hit because Jerome Powell just blasted us through this. But now what we can do is this right here. I mean, this is kind of like what I would call a schlonging opportunity, which is a short and a long at the same time, right? So all you do is you just move this one over here and you say, okay, if we get under this 200 moving average, right? And this is kind of where I'm talking about the schlong, right? It would be what's called a straddle in the options market. If you get a rejection, you get below this, you back test the 200 moving average and you back test this, and then you break down. That is where you would be entering shorts to then target, obviously, the bottom end of this trend channel. Again, game time decisions at these swing lows, okay? Once you start getting into profits, you got to trail your stop loss that way, or at least move it to break even. That way you don't lose on your trade, okay? So watch this level right here. Those are your 2 trades as it sits right now for your 827 trades. That's a long and a short, okay? Now, secondarily, you can also short up here at a potential, again, swing failure pattern, right? Setting your stop loss outside of here, right? And then riding it back down, okay, to those previous lows. And then again, game time decisions at the moving averages, okay, 8.27 short SFP highs, okay? So these are the highs that you would be, shorting on a swing failure pattern. And then secondarily, if you come back down here, right, you could be looking for a potential bounce, okay, right here, okay? So 827 bounce symmetrical triangle, okay? Whoops, this. And then one more that we can kind of put in here is this. Got one more shorting opportunity right here. You break down from, right, short symmetrical triangle loss. Bang. So those are your trades as it sits right now. I think we got like, what, 5 trades on the golden opportunity right now. So see which ones of those hit. We will see how it goes next week. Can we keep our win streak alive? Can we keep our win streak alive? That's what we're trying to figure out. That's what we're trying to do. And that's what we want to continue doing, obviously. I wish that I could, be a little bit more like tell you when to get in and when to get out. But, this stream is only once a week. So there's only so much that I can do. Let's get into the next segments, which is going to be called the commodity compass. Okay, so what's happening inside of the gold markets right now? Well, we know that the Fed turmoil has boosted the safe haven demand. President Trump actually attempted and, successfully removed a Fed governor, and it stirred up the, kind of like controversy on the Fed's independency. Okay, so that obviously lifted gold prices. Then we have unease amid political interference, where there's a lot of people out here saying that undermining the Fed's kind of like credibility like that could actually prompt even more safe haven demand for gold and silver. Okay, we've got profit taking, a little bit of a pullback on the US dollar pumping up, and then obviously the massive, massive move that we saw after Powell announced that he didn't announce it, but he hinted at the potential rate decrease coming in September. Then we have our key focus this week, and we'll talk about this here in just a second, is going to be Nvidia earnings and PCE, okay? Then we've got both of these data points are going to be like major movers for, what we're going to see happening inside of not only the metals markets, but also currency markets, the stock market, and definitely on Nvidia's chart, right? So we'll talk about those here in just a second, but just watch out for those things. All right. Now I want to get into what is called the knowledge bank. Okay. And the knowledge bank is, I'm going to show you, I want to do a little bit of Fibonacci teaching, right? I love Fibonacci's, and we'll kind of show you what's going on with these fibs. Okay. So let's pull this fib from this big, massive move down. Okay. So as you can see, these fib levels, they get very well respected. Retrace immediately to the 0.618, right? Rejection, bounce from the 0.5, ran through the 0.618, used the 0.5 again, and just legged its way all the way up to the 0.786, and then bang, fell all the way back down to the 0.236 fib, man. This stuff, you can't make it up. You cannot, when you're pulling it from these nasty, massive highs to these massive lows, especially when it's like a straight move down. I mean, these fibs play out so often. Look at this one. Basically a straight move up all the way to these highs, right? Where did it retrace to? The 0.618 fib. And then guess what happened? And this is the beauty of the golden opportunity. If you get inside the golden opportunity, you will be able to kind of put all of this together all at the same time. But what happened here, right? Does that look like a head and shoulders pattern with a breakout? Absolutely it does, right? And then bang, that Fed news came, full target hit. So all I'm saying is show me the charts and I'll tell you the news, right? Show me the charts and I'll tell you the news, and I'll do this even better for you if you'd like me to. And we can kind of prove, that these things will kind of tell the tale of the tape, right? This is a very, very symmetrical head and shoulders pattern, and it is moving upwards, okay? So, and that's good. That's what you want to see, okay? So let's say that even it took it all the way down to this low, right? Bang. Immediate move up. Let's look at the target on this. Target is from this low to the upper end of this, okay? Move it up. Bang, baby. Bang. Top out. Nice. You have to watch these fib levels, especially when you regain one, right? And then back test it as support like you did right here. Boom, that's blast off all day. That's a beautiful move. That's a perfect, nice little setup. And it's stuff that you don't really have to do too terribly much guesswork on. These Fibonacci's play out more times than not. I'm not saying that these Fibonacci's, and take that with a grain of salt, right? These Fibonacci's, and I have an entire training based around Fibonacci's. Extensive training on Fibonacci's, and even one on trend-based Fibonacci's when you're in price discovery mode, which is kind of where gold is whenever it hits these all-time highs, that can tell you where could gold be going from here, right? So you can't just take these Fibonacci's and say, okay, I'm just going to enter because it hit the 0.618. Well, no. What else is going on? You have to have 2, 3, 4, 5 different reasons to be in a trade. So I'm not telling you to just trade based on Fibonacci's, but use it as a confluence tool to kind of get you in and out of your trades profitably, right? Now, let's get into our special reports now that we've done our teaching. All right, we have the central bank watch, and we're going to spend a little bit of time on this because there's a lot of stuff going on. I do have it kind of like, I have it in front of me so that I'm cognizant and conscious of your time and also respectful of it. So we're just going to bang through it, and I'll tell you everything that's going on. So there's obviously ongoing concerns, right? The, central bank's autonomy is being questioned, okay? Especially after Trump, did what he did. Trump doing Trump things, right? And we'll talk about that here in just a second. But even though the FOMC policy hasn't really changed yet, you're going to see political pressure, and it's going to trigger safe haven demand. That's what always happens whenever political pressure comes in, and whenever there's economic pressure as well, okay? And this is, again, stuff that we teach inside of the Golden Opportunity, where you'll know all of these things like in advance. And we give you all like an entire calendar that says, here's what you need to watch for. Here's what you don't really need to worry about, right? So Powell then opened the door on Friday at Jackson Hole to potential rate decreases in the future coming in potentially September, right? So he kind of subtly signaled this because, as early as mid-September, hopefully, and citing a shift, right, in the balance of risks towards weakening employment, okay? But he did emphasize that, this isn't a guarantee. We're going to remain data-driven with our decisions. Then we have the labor market, and it's softening, okay? But it's still stable, okay? So he's also acknowledging this. I'm just kind of giving you a brief synopsis of everything that he said, okay? Kind of acknowledged that job growth, it's slowed, an average of 35,000 jobs per month recently versus about 168,000 in 2024. Yet the unemployment status remains historically low at 4.2% and, for the most part, steady. Then we have our tariffs and immigration and, growing economic headwinds that are, kind of triggering Powell's response. So he did warn that the rising tariffs are kind of beginning to push up the prices, and the, restrictive immigration policies are reducing labor supply. So whenever we have these tariffs coming in, you're going to see producer price index going up before the CPI goes up. So if you're only paying attention to CPI, you can't do that, because with these tariffs, it costs more to get these goods here, right? And if it costs more to get these goods here, then manufacturers have to charge more to their distributors in order to sell those goods. Then what do the distributors do? They have to pass that cost down to the retailers, okay? And then what do retailers do? They had to pay more for it. They have to pass that cost down, that increased cost, down to consumers. So it takes, sometimes 3-6 months for CPI to then catch up to PPI, and PPI might be actually falling off by the time CPI is pumping, right? So, and these are both like inflationary, this is how much it's costing for people to go out and buy goods, okay? So just keep that on your radar, because those things going up absolutely bolster safe haven demand and the prices of gold and silver, right? Now, reverting to, your traditional inflation targeting, Powell and the Fed have always been kind of focused on inflation, okay? He did introduce a revised framework, and this is essentially what it said. The Fed is shifting away from its flexible average and inflation targeting and returning to conventional, so flexible inflation targeting, and he's reaffirming their commitment to an overall 2% inflation goal. Now, we do have trading optimism, but it's met with a dose of caution. So just take that into account. Markets obviously responded enthusiastically to what Powell said, but also understand that, we're putting 50% tariffs on India, ongoing trade negotiations with China. Europe actually removed some of our tariffs so that we would lower the tariff on their imports for automobiles. These are all the things that you need to take into account. Now, Trump doing Trump things fires a Fed governor. And this kind of just like absolutely, this shook up the markets and Capitol Hill. Okay, so this was Lisa Cook. Okay, and it shocked everyone that he did this. Now, it's kind of viewed as like an unprecedented breach of the Fed's independence, because the Fed is not a federal entity. Even though it's called the Federal Reserve, the Fed, it's not actually, it's a private entity. Okay, so gold surged whenever this happened, okay? And, people are going to flee to safety when they see stuff like this happening, political unrest, okay? Now, there are early warning signs of a Fed pivot trap and consumer recession data, okay? So again, remember what I just talked about with PPI hitting first, going up first, and then CPI will catch up to it later, okay? So there is a possibility that the Fed Reserve is at risk of falling into what we would call a pivot trap, okay? And this is cutting rates too soon in response to political pressure. They're talking about rate cuts during the textbook definition of stagflation. So when the Fed normally is focusing on combating inflation, which means they would raise rates, right, to then help inflation go down, they're actually lowering rates when inflation is going up and economic growth is either stagnant or going down. That is what is stagflation, okay? So new consumer data is actually showing spending weakness and signaling kind of like a sign of a rolling consumer-led recession, especially once CPI catches up to the PPI, right? So yeah, I mean, people are comparing it to the post, pandemic environment. And they're just cautioning that premature easing could actually stoke inflation, bang, right up again, making, obviously, gold more attractive, right? So let's talk about our last special report, and then we'll talk about the economic calendar. This is going to be called Inflation Insights, and we're not going to spend quite as much time on it. We really needed to cover that Fed meeting because there was a lot that was said and a lot that's coming from it. So you have to understand these things. And again, if you want to understand these things better, get into the golden opportunity. So now, eyes are going to shift to our upcoming U.S. inflation data and, obviously Nvidia's earnings, but markets are eagerly awaiting that PCE data, okay? And we're going to talk about what date that comes this week and also Nvidia in a second. So the Fed's preferred inflation gauge is going to be PCE, okay? So this will come with key consumer income data and spending data later on this week. And these releases, not only the PCE and inflation data, but also Nvidia's earnings, like watch for that, could really heavily influence the expectations for a September rate cut, okay? And at the same time, Nvidia's earnings and its broader kind of like AI leadership, it remains a market focal point because they, like literally, if Nvidia tanks by a bunch, it's going to drag the S&P down, okay? Now, there is also someone out here, Zhang, warning that the Genius Act could trigger hyperinflation. And, I want to talk about that in just a second, but I also want to talk about, if Nvidia comes in and kind of like misses on earnings, it could drag the markets down with it, which could then pump gold, right? If Nvidia comes in good, then, it might actually make gold pull back. And then obviously, Nvidia is going to rise and potentially the stock market rises. But if Nvidia shows good earnings, then they might not be as worried about cutting rates. Whereas if they don't, they could be more worried about cutting rates, right? Same thing with the PCE data. If PCE data comes in hot, they might be more likely to, cut those rates, as now we know what is happening with Powell's remarks. They'll probably be more likely to cut those rates sooner. And if PCE data comes in, good or, less than expected and it's cooling, then, they might not, right? So, these are kind of like wild and unprecedented times where they're like doing things that they wouldn't normally do. It's kind of crazy. So I've never seen this. Okay. So now there's this so-called like Genius Act, okay? It's a globally coordinated economic policy proposal, and it could result in runaway inflation. That's what a lot of people are saying. So the act involves large-scale currency debasement and debt monetization under the guise of what's called economic stabilization. And a lot of people are seeing this as a coordinated kind of effort by major central banks, the Fed, that will kind of erode fiat value and then sharply boost the demand for, gold and real assets. So, when you print more money, it becomes worth less. And then obviously things that are finite in supply, like gold, silver, even Bitcoin, they probably become more, attractive to people, as we'll put it like that. So now that we've gotten through all of our segments, okay, I want to tell you what is going on this week that you need to pay attention for to see, like when you're getting into these trades, you got to pay attention to the economic data and the fundamentals that are coming behind them. And that'll help you decide, am I going to get into this trade or no, right? So now, August 27th, okay, which is today, we have our U.S. Imports for consumption and steel products. That literally just dropped about 5 minutes ago, okay, 10 a.m. Advanced economic indicators. I mean, you can kind of watch this. I wouldn't be too terribly worried about it. Friday is what I would be more worried about, okay? That's the PCE data. And then you've got construction spending, and PCE data comes in at 8:30 in the morning. Construction spending, manufacturing, shipments, orders, trade receipts, and inventories. And those also come in at 8:30, but they'll probably kind of get like glazed over by everybody because of PCE. Okay, and that's just kind of how it goes. It's kind of like all the economic things that were happening last week just kind of got glazed over by the Fed meeting in Jackson Hole. Okay, so the big things will move markets, and if there's a bunch of small things, they can help, but a lot of times they'll get largely ignored. Okay, now Tuesday, okay, which is next Tuesday, we have construction spending again, right? And then we have manufacturers and shipments, inventories, and orders on September 3rd, which is Wednesday of next week, and then the trades and goods services, which are going to be also on Wednesday. So these are the things that, like I was saying, could potentially be overshadowed by PCE data that happen on Friday. Like, I mean, if there's like a turning point where, a tipping point where things could happen after the PCE data comes in, maybe the international trades and goods services, push it there, but they're going to be weighted much less than the heavy weight that we're going to put on the inflation data. So with that being said, I appreciate everybody so much for showing up. If you show up here every single week, seriously, we appreciate you so much. Humble gratitude from my end. And I hope everybody has a good day. I hope everybody has a good week, and happy trading. We're riding high on a lot of gains. Okay, let's try to keep that gains train rolling, because you show up for the braids, you stay for the trades, and let's see how many trades that we can get next week or this coming week that hit, and let's see if we can keep that.
Hey guys, Lawton here with Verified Investing, and today I'm here to talk about Kinesis.money, our sponsor. Thank you to Kinesis for sponsoring us. So Kinesis has this awesome thing called yields, in which you can literally earn gold by just performing different activities on their website and their platform. So the first way that you can earn on Kinesis.money is through their holders yield. So basically what that is if you buy some KAG or KAU from them, which is basically equivalent to gold or silver, they're one-to-one crypto equivalent of gold and silver, you're able to collect money from them, right? A percentage of all of the fees that Kinesis takes over transactions, over buying KAU, KAG, or anything else is distributed to people that hold on to KAG and KAU. So super cool. Now the velocity spending is also really cool. So if you spend KAU or KAG, you're actually going to get a percentage of all the fees. Again, this is of all the fees that Kinesis takes relative to how much you use Kinesis. So this is things from going to the grocery store and buying things on your Kinesis card. This are things like buying KAG, KAU, sending it to someone else. And finally, it's the same thing as trading on their platform, right? If you do any of those things, you qualify for this velocity yield. The next awesome way that you can earn with Kinesis is through the referrers yield. So if you refer any friends, family, you'll get a percentage of all of their transactions in perpetuity, which is super cool. They also have a partner for a program for partners and minters. But what I really want to focus on is this KBT, the most exciting part of Kinesis for me. 20% of all of the shares of all the transaction fees that happen on Kinesis are going to be distributed to holders of the KVT crypto token. There's a limited amount of crypto supply, but that's a really cool way to actually own part of Kinesis. You can get in on the ground level and just hold those tokens and collect a nice return. Thank you so much to Kinesis for sponsoring this video, and go check out their website at kinesis.money.